Let's get going then. We have some earnings calls lined up, and we're kicking things off with Ashok Leyland. Now, the company reported a pretty good set of numbers for the quarter gone by. Revenue was up about 16%. There was margin improvement as well. In fact, the MHCV portfolio gained by about 21%. To discuss this and more, we have Shenu Agarwal, MD and CEO of the company, joining in now. Mr. Agarwal, thanks for joining in. Season's greetings to you. So it's good tidings after quite a decent first half. Let's talk about whether you see that kind of optimism and these sort of numbers and this performance prevailing in the second half as well. What demand trends are you noticing?
We are actually very happy with the first half results, and more than that, we are very optimistic about the second half as well. Now, whether it is on the demand side, on MHCV or LCV or even other business segments that we operate in, or whether it is, on our ability to further fetch better market share or better margins, I think we are very optimistic about second half and even beyond that.
Oh, that's good to hear, sir, that you're optimistic. But what kind of growth are you expecting for the industry and Ashok Leyland by the end of the fiscal?
Let me first talk about the MHCV side. So on MHCV side, when the year started, we had estimated an industry growth of 8 to 10%. Now, you remember that when at end of quarter one, everybody was very worried because quarter one was very flattish. And we had said at that time that the quarter one industry is flattish only because the demand got preponed into March, the previous fiscal. But coming quarter two, you will see that that cover-up will happen. So I think that is what has happened. Quarter two industry on MHCV side has grown by 21%. But if you look at H1 overall, the growth has been 10%, which is on the higher side of what we were expecting in the beginning of the year. I think MHCV, a lot of positive macroeconomic factors are playing out in the favor of the industry. I think similar growth trends we should see. We still want to maintain our 8 to 10% market share growth estimate for the whole year. On the LCV side, when the beginning of the year, we had projected that market might grow by 4 to 5%. In first half, actually, it has grown by roughly 2.5 to 3%, right? So it is not so far off from the initial estimates that we have. But we are seeing actually more and more green shoots on the LCV side as well. We are seeing an uptick in e-commerce demand. We are seeing that rural demand is actually picking up for last couple of months. So we are very hopeful that even the LCV, we will see some turnaround, and we might see a situation as we expected in the beginning of the year, that the industry on LCV side will also grow by about 4 to 5%.
So with respect to volume growth, overall, what are your expectations for this year, FY24, and maybe beyond as well, for the company and the industry?
See, Ashok Leyland, after having a great fiscal year 23, where we could increase our market share by more than 5%, actually, we are very happy that we have been able to further build on it. If you look at H1 on the MHCV side, our market share has grown from 31 to 31.6. When we did our investor call a few months ago, we said that in the medium term, our target is to get to 35% market share. And we think that we are steadily moving towards that goal that we had set for ourselves. Even on the margin side, we said that during the current year, we want to be in double-digit margins. We are very happy that we could actually achieve double-digit margin in quarter one of the year itself. In quarter two, we have improved on that margin. The quarter one EBITDA margin was 10%. Quarter two, we have now reported 11.2%. And then again, on the margin side, we are seeing that there are some positive wins, which will help us going forward in H2. On one side, the commodity prices, we think, will soften up going forward. On the other side, our efforts on better price realization and better mix are also yielding results. And lastly, I would say that we are really focused on looking at our operational efficiency, whether it is direct material cost or indirect material cost or our overhead or manpower cost, we are looking at each of the costs. In H1, we have received certain benefit of the cost savings, but in H2, there will be more benefit that will come from cost savings. So we really hope that in quarter three as well as quarter four, not only we will improve our market share, but also on the margin side, we will present a better story.
Okay, that's interesting. So speaking of margins, how is the discounting at the moment? Has it cooled off, or are you continuing to see high levels of, competitive pressures and therefore discounting? What's the second half looking like?
No, we don't think that discounting has either gone up or gone down too much. We think that there is actually a realization in the whole CV industry that the growth has to be a profitable one. The kind of EBITDA margins the industry was operating until last year or the year before last was really pathetic. So really, I think everybody in the industry realizes that, everybody wants profitable growth, and therefore the focus is on improvement of more of the fundamental levers. At Ashok Leyland, for example, we are very, very focused on investing into new product development to clear out whatever gaps we have in the product. And also we are very focused on expanding our distribution network to improve our reach. I think if we continue to do that, and if we continue to focus on operating efficiency, I think the industry will do really, really well.
All right, final question, sir, before we let you go. What are your capex plans? Demand is relatively strong and it seems to have gone up as well. Do you have any plans to increase your capacity?
We are not worried about the capacity right now. I think we have enough capacity for the next 2 to 3 years. Even if we have to think about any capacity expansion, that would be 2 to 3 years later, not right now. On the capex side, otherwise, most of the capex that we are doing is either replacement capex, or most of it is actually going into our product development. And even within product development, most of the capex is targeted towards development of alternative fuel and new tech vehicles.
Okay, good to get that feedback from you, sir. Thank you very much for your time. Good speaking with you here on CNBC TV 18.